The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Hey, happy Monday, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. Monday through Friday, 3 to 4 Eastern on the TFNN radio network. If you can't listen to the show live, I always like to remind you, you can always check the show out on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, your web browser, type in tfnn.mobi. tfnn.mobi, and you can listen to the stream that way as well. And if you're sitting at your PC listening to the stream on the computer, don't forget to check out Tiger TV. The show is carried live on Channel 1. It is archived on Channel 13. And with Tiger TV, not only do you get the audio of the show, but you can also look at charts live right along with me. Tiger TV is also viewable on your handheld device as well. So the market is trying to bounce back here off its lows. We'll talk about Apple in just a little bit. iPhone sales. Gene Munster over at Piper Jaffray was talking, 6 to 10 million over the weekend, and 6 million would be a worst-case scenario. And, Apple sold less than 6 million. They came in at around 5. But we'll talk about Apple in just a little bit. What's important to note here is that the market is trying to rally off its lows. You take a look at the NASDAQ composite here. After hitting an intraday low of 31.50, it is back up to 31.63, still down 16 points on the day, about 0.5%, but seems like there are still buyers around in this market. You kind of get the feeling that people are saying, hey, this market wants to, pull back. How far is it going to pull back? Let's take a look at another view of the NASDAQ composite here, and we'll see the NASDAQ composite with the 10-day, 20-day, and 50-day moving average. Three kind of near-term support levels. You see the NASDAQ composite is pretty much trading right at its 10-day moving average right now. Its 20-day moving average is at 31.24, and its 50-day down at 30.37. So a pullback down to 30.37 would be probably a little bit harrowing. You probably see some growth stocks come in pretty quickly. But not out of the question. I think we could come down to the 50-day moving average, but let's see if their market still remains soft. Let's see what the NASDAQ composite does at its 20-day, which again is 31.24. That is only about 35-40 points from that price level. Let's take a look at the S&P 500 as well, and I'll just grab a stored chart in here as well so we can take a look at the 10-day, 20-day, and 50-day here as well. S&P 500 right now down less than 1 point to 1459. It is also trading up near its session high after hitting an intraday low of 1452. So all in all, some buyers around in the market today. Let's before we get to Apple, let me just talk about the volume. Of course, Friday we had options expiration, which resulted in very, very heavy volume on the exchanges. Despite the heavy volume Friday, it was really, indices did not do much of anything. They closed mixed, mostly unchanged. But volume Friday on the New York Stock Exchange was, 1.63 billion shares, 1.63 billion on the NYSE. That is more than double what it normally trades. Right now, you've got volume tracking about 50% lighter than that today. Still could get us to around 850 million, so there's a little bit of selling pressure in the market, but again, the fact that indices are up near their highs is a good sign. So if volume kind of stays the way it is right now, we could see 850 million today on the New York Stock Exchange. NASDAQ volume on Friday, very heavy as well, 2.36 billion shares. We're on pace right now to do maybe 1.92 billion on the NASDAQ today. Overall, the market holding up pretty well here. Let's take a look at the SMH. This is a ETF that tracks the semiconductor sector. It is really a technical mess here. So a lot of people concerned that weakness in semiconductor stocks due to the soft PC market is not going to eventually be good for overall market health. But again, the market doing pretty well considering that the Market Vectors semiconductor fund here is in such poor shape from a technical perspective. Chip stocks under pressure again today, down 1.4% to 31.84. So you've got kind of a crummy looking chart here, but you do have the financials that are still hanging in there pretty nicely. This is a chart of the Financial Select Sector Spider Fund, XLF. It is up 5 cents today, 0.3% to 15.88. Still not really showing technical weakness here. Its chart is still intact. So you got the weakness in the semis. You got your financials still, trying to act well here. So overall, still not bad with the market. I'm sure with Apple's news and Apple's sell-off today, people were thinking that the market would really get hurt as a result of that. If you're a believer that Apple is the market, I think it still makes up about 20% of the NASDAQ 100 index. But let's check in on shares of Apple. It is down $9 right now, only a 1.3% decline to $691. I am long this stock for my Ultimate Growth Stocks model portfolio. If you do want to try 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of tfnn.com. Just click on the newsletters tab right on the homepage, and then you click on investment newsletters, and then I believe also on the homepage in red letters there it says try Ultimate Growth Stocks. So 30 days free. You can see how I approach the market, the model portfolio. It's got a fair amount of stocks in there, and many are working nicely. And I'm not seeing major sell signals in the broad market, nor am I seeing major sell signals in leading stocks. So it's sort of steady as she goes right now. Getting harder to find long opportunities, so I've taken my foot off the accelerator a little bit, but I feel like I'm well positioned here if this market is going to continue to act bullishly. But Apple right now hit an intraday low of 683, trading up around 691. But again, the iPhone sales this weekend, 5 million, is that bad? Well, it's probably a little bit below expectations, but I still think it's going to be a tremendous Christmas for Apple. Don't forget we've got the iPad mini that's probably going to be coming out within the next several weeks. So innovation still going on at Apple. And don't forget that when the Apple sold the iPhone 4S last year, they sold 4 million units during the first weekend it was available. So the iPhone 5 selling 5 million. That is better than what they did with the 4S last year. But again, Gene Munster over at Piper Jaffray predicted 6 to 10 million sales this weekend, and said 6 million would be a worst case scenario. So that rattled investors a little bit, but overall Apple holding in there pretty well. Let's take a look at another look at Apple here with the 10-day, 20-day, and 50-day moving average, and you can see it's trading right at its 10-day moving average here. Support at the 681 level. That would be its 20-day moving average, and the 50-day all the way down at 643.50. thereabouts. So that is a look at Apple. Mentioned a weakness in chip stocks today. Interesting to see Mellanox Technologies. This is this Israel-based high flyer. It was trying to make a case. It's firming up at its 50-day moving average, still holding above the line, but there are some sellers in the stock today. It's down 3.3%, underperforming the market materially. Not huge volume behind the decline today, but shares are recently trading around 107.38. Its 50-day line is around 104.50. So some selling pressure in Mellanox Technologies. Cirrus, C-R-U-S, this is a company that makes audio chips for the iPhone and the iPad. Cirrus under some pressure today. This is a stock that could try to find support at its 50-day moving average soon. It's been under pressure now for, looks like 4 straight sessions, 5 out of the past 6. It's down another 3.8% today to 40.36. Of course, the sluggish iPhone sales over the weekend, that is hurting shares of Cirrus Logic. But again, still holding above support here. This is a strong enough stock where again, some of these big market leaders, you expect them to find support at their 50-day moving averages when the market eventually pulls back. a name like Cirrus, I would expect, would find support at this $37.50, $38 price level. Take a look at shares of Google today. Google going into this week working on 10 straight weekly price gains. It is up big again today, up more than $15, 2% of 749.04. Earlier today, Citigroup raised its price target on Google to $850 from $740. So think about Google after 10 straight price gains. This is a stock that is very, very extended in price after a recent breakout. You had a couple swing points over here. 650 was the last time it broke out, so it's almost 100 points above its last breakout area. Want to let this one pull back at some point. Chasing up here, probably risk outweighs reward, I would say. Taking a look at crude oil today, down 1% to 91.93 a barrel. That is, a 7-week low, I think I read. 7-week low for crude oil today. Gold for December delivery lost $13.40, 0.8% to $1,764.60 an ounce. Not surprisingly, the GLD, Spider Gold Trust, is under pressure today, but trading up near its session high. It's still down 86 cents, about 0.5% to 171.10. Gold weak today due to a strengthening dollar, but dollar's not up by that much, really. 79.57, up about 24 ticks. Take a look at the U.S. dollar index here. This is as of Friday's close, but it's been in rally mode. Started to rally last week and closed Friday at 79.33, so up today 24 ticks to 79.57, but still is going to have a lot of overhead supply to work through here. Yield on the 10-year note, let's check that out. That's $TNX on my interface here. Yield on the 10-year note right now at, call it 1.72%. Yields have been under pressure now for 6 sessions in a row, and the yield on the 30-year note, which would be TYX, 30-year bond, I should say, down to 2.9%, maybe 2.91%. In earnings news, home builders under a little bit of pressure today, but not by much. Numbers were very, very good at Lennar. They reported earnings before the open. Looks like an outside day taking shape for shares of Lennar, down 1.7% to 36.89 after hitting an intraday high of 38.27. This is one of many extended stocks out there, so people say, well, if the numbers were so good, why isn't the stock going up today? Well, it broke out over $32 back in early August, and it's pretty much moved straight up without consolidating. So at 36.89, extended more than 10% past that last swing point around 32. But the numbers were good. Earnings up 264% from a year ago to 40 cents a share. The estimate was for 28 cents. Sales up 34% from a year ago to 1.1 billion. Check out some of these metrics. Deliveries of new homes up 28% to 3,655 homes. New orders up 44% to 4198, and its backlog now stands at 4,513 homes, up 79% from a year ago. Some very strong numbers from Lennar. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. I mentioned that home builders under a little bit of pressure today. Very strong numbers from Lennar before the open today, but the stock is under some selling pressure. Let's check out the popular ETF that is a basket of home building stocks, the ITB, iShares Dow Jones U.S. Home Construction Index Fund. It is down 1.3% today to 2031, but what you have in the home building sector clearly are stocks that have been under accumulation for several months now. Now, when stocks are under accumulation like this, and they're very extended in price, and way past proper buying areas. In fact, if you look at the ITB, see this broke out in August, and it broke out over 17 and a quarter, 17.50, something like that. It is now $20.31. You want to let this one take a little breather as well, but really strong stocks sometimes are just going to move sideways. They're not going to give up much ground. They're going to pause, consolidate gains, and instead of correcting sharply, 10, 15, 20% off their recent highs, they're just going to move sideways, maybe correct 5, 10%, form a little flat base, and if there's good support out there and funds are generally holding on to positions, that can pave the way for additional strength. So definitely don't want to chase the home builders up here. But fundamentals seem to be definitely on the improve in that sector. Economic data this week, a little bit, not much going on. Tomorrow we've got the Case-Shiller 20-city index for July. We've also got the Conference Board consumer confidence reading for September. Wednesday, more housing data. We've got new home sales for August, and Thursday, pretty busy day. We've got weekly jobless claims, we've got durable orders for August, and also the third estimate to second quarter gross domestic product. That's expected to be unchanged at 1.7%. And remember, in the first quarter, the economy grew at a rate of 2%. And fourth quarter, I think the economic growth was north of 4%. So growth slowing a little bit, but 1.7% growth is expected this time around. Also on Thursday, pending home sales for August, and then Friday, personal income and spending for August, the Chicago Purchasing Managers Index for September, and the final reading on consumer confidence from the University of Michigan for the month of September. All right, let's take a look at some other headlines today. Let's check in on shares of Veeco Instruments. This is an LED light-emitting diode equipment maker. Stock under pressure today after Goldman Sachs cut its rating on the stock to sell from neutral and set a new price target of 27. Right now the stock is down $3.56. A little more than 10% to 31.40. Look at this 200-day moving average here at 30.61. One would think that would be a support level from here, but if sellers continue to gain traction here, it could take out that 200-day line. So we'll see. Veeco under a lot of selling pressure today. Also, Cooper Tire and Rubber, that takes trades, I should say, on the New York Stock Exchange. Interesting, the stock got crushed Friday, down 9% after KeyBank Capital Markets downgraded the stock to hold from buy. Earlier today, Deutsche Bank upgraded the stock to buy from hold. So dueling upgrades and downgrades here. CTB so far holding above its 50-day moving average at 1936. Stock is trading around 2084 right now, up 4.5% on the day. Facebook under pressure today. Facebook and Apple, why the tech stocks are generally having a rough day today, but Facebook under a lot of pressure, down 8%, $1.85 to 21.01. Right when it gets back above its 50-day moving average, boom, it's right back below it. Barron's wasn't too nice to Facebook over the weekend, said it was a $15 stock. And, the times I've talked about Facebook in the past, valuation-wise, this is still an expensive stock. In fact, down 8% today to 21.01, it's still an expensive stock. At $23 a share, which is where Facebook closed on Friday, it had a trailing price-to-earnings ratio of 46. At $15 a share, it would have a trailing PE of 30. So, you're still talking, even at $19, $20, $21 a share, this is a stock that's still getting a premium multiple from the market. And again, after Mark Zuckerberg recently spoke at TechCrunch, came across pretty well, sort of allayed fears that the company's strategy was out of focus, and Facebook had been doing very well. So I don't doubt that Facebook will eventually be able to grow and be a legitimate company. They do have a lot of challenges ahead of them, though, and an unproven management team at this point, as a publicly traded company. So Facebook under a lot of pressure today. Barron's thinks it's a $15 stock. It's now trading around $21 a share. You're listening to Breakout Investing on TFNN, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Markets are trying to recover from early weakness. Dow right now up a little more than 3 points. It's actually green on the day, so that's a big improvement. Trading around 13,582. The Nasdaq still can't get out of its own way here. Tech stocks under pressure for most of the day thanks to weakness in semiconductor stocks and also Apple. Nasdaq right now down a little more than 18 points, 0.6% to 3161. S&P 500 down, but not by much, only 1 point to 1458. Check in on shares of Questcor Pharmaceuticals, QCOR. This stock had a big gap down, or a big move down, I should say, late last week. slumped again today. It's down another 35% to $19.57. News: the government is investigating its promotional practices. The news comes on the heels of news last week that Aetna isn't so keen on the company's flagship drug Acthar gel, which is used to treat multiple sclerosis, a kidney disorder known as nephrotic syndrome, and also infantile spasms. So Acthar is an injectable drug. The drug had net sales of $218 million in 2011, up nearly 90% from a year ago. So Questcor has been a nice performer in the stock market, but boy, just a lot of negative headlines around Acthar. Not because of lack of safety, but again, the Aetna news last week wasn't good for the company. Now there's news that the government is investigating the company's promotional practices. So still seeing analysts defending this company, but boy, it was a $50 stock last week, and it is now $19.57. So wouldn't touch this one with a 10-foot pole. Also, shares of Citrix Systems under pressure today. Morgan Stanley cut its rating to equal weight from overweight, saying that the virtualization software company could see some weakness in its business due to a sluggish PC market. So shares of Citrix Systems down 5.2% to 76.96, back below its 50-day moving average. Support should be right around that 75 level. So it's about $1.50, $2 above the 200-day line at $75 a share. Take a look at shares of CRM, Salesforce.com. In actually a decent technical setup here. There's a swing point of 161.90. This looks to me just like a cup with handle pattern. Handle area forming here in mostly light volume. The stock is underperforming a little bit today, but not by much, only down $1.44 to $153.76. This is the leader in the field of customer relationship management software, cloud computing name, but Salesforce technically still looks pretty good here, and can't rule out an upside breakout over that last swing point of 161.90. So I'll take a look at some other stocks here. West Pharmaceutical Services. This is a small cap. Market cap between $1.5 and $2 billion. It is thinly traded. Only has an average daily volume of 135,000 shares. But this stock, buyers have really been coming into West Pharmaceuticals lately. It took out a swing point today of 51.81. Normally in a U-shaped pattern like this, I've said it before and I'll say it again, it's normally good to see a little handle area form where the last remaining sellers get shaken out of a stock. But this stock is working on several up days in a row. Took out its high over here of 51.81. It is now trading at 52.11, up 1.4% on the day. West Pharmaceuticals is a medical device maker focused on injectable drug delivery. But again, it's thinly traded. It is an example of a base breakout. When a stock takes out a prior high, like West Pharmaceuticals did today, it's not uncommon to see a high handle area form. So it could drift lower down to the $50 level in light volume. There's your handle area, and you could see a meaningful upside breakout here. On the speculative side, and again, average daily volume of 135,000 shares. That's a little thin for my test, but an interesting company here with decent fundamentals. Let's take a look at FDS. They're going to be reporting earnings tomorrow before the open. I think it may not be till after the close, but I know earnings are definitely coming tomorrow. FactSet Research Systems. This is a company that provides financial and economic information to the investment community. Swing point of 104.81 here. It is trying to break out. Breakouts right ahead of earnings always make me very nervous. You could have some short covering today. It may not be a quote-unquote real move. You look at a 2.8% move for the stock today to 103.41 and say, well, smart money is getting into this stock because earnings are going to be great tomorrow. That may be the case, but it may not be the case, because I've seen both situations play out here. You see money moving into a stock a day ahead of earnings. Sometimes it launches a big move on earnings day. Other times the stock goes the opposite direction. So I would just wait and see what FDS has to say tomorrow. Earnings are expected to be up 20% to $1.06 a share. Sales up 8% to $207 million. So definitely has come back to life here. There are some buyers in the stock. There was actually some pretty heavy volume in the stock on Friday, but it has bounced back nicely today. Again, up 2.8% to 103.41, vying for a technical breakout over 104.81 ahead of earnings tomorrow. FIVE, this is a recent new issue. We talked about F5 not that long ago when they reported earnings. There was a little bit of market got a little spooked when it reported earnings earlier this month. It broke out over $34 a share on September 6th, and then the stock plunged on September 11th. It hit an intraday low of 31.20 but closed near its high for the day, and that was on this day right here. So it has gathered itself and is actually looking pretty good here. Stock is outperforming nicely today, up 3.5% to 37.15. I believe that's a new all-time high for Five Below. Remember, Five Below, all their merchandise is priced $5 and below, and they cater to the teen crowd. So sort of an offshoot of these dollar stores where you can buy everything less than $1. Five Below targets the teen crowd with items $5 and below. Take a look at PVH. PVH stands for Phillips Van Heusen. The company used to be known as Phillips Van Heusen, but now it's just PVH. This is an apparel company, sportswear, and the like. Up $1.60 today, 1.7% to 94.23. The stock, I believe, got an upgrade today. I'm sorry to say I don't know who upgraded, but I seem to remember something about an upgrade earlier today. It is approaching a swing point of 95.98, trading in the middle half of its range, though, now at 94.23, up 1.7% on the day. And the one yellow flag with the PVH, a lot of people say, well, it's a strong chart, bullish chart. Why don't you pick up some shares? Valuation is reasonable, and what you have here is decelerating sales growth over the past couple of quarters from 4%, and sales were flat last quarter. Sales were 1.3 billion, but there was no growth. That's the same amount that they did in the prior quarter. So normally, if I see a bullish chart like this, I want to make sure there's a compelling fundamental story, and fundamentals aren't bad by any means at PVH. It's just not showing the growth that I like to see. Let's take a look at a weekly chart for PVH. Let's see here, Phillips Van Heusen. There's the weekly chart, and you see a really nice technical structure here, a base that started all the way back in March, April, thereabouts. A little bit wide and loose here, but it did firm up and started to retest its high. You see a swing point of 95.98, just kind of moving sideways here, forming a little bit of a handle area. So, breakout could work here. Keep in mind, though, that the market has been serving up technical breakouts for several weeks now. And I know I mentioned this last week that you want to be careful not to buy laggard breakouts. When this market rally started all the way back in July, seems like a long time ago, but that is when the breakouts started happening, late July, early August, mid-August, late August. So stocks have been moving for a while, which I think lends gives credence to the argument that we could pull back here. So a company like PVH, though, is setting up nicely, and if it does take out that swing point 95.98 with some volumes, it might be worth a nibble. Another stock out there showing uncanny price strength, ResMed. ResMed deals in sleep apnea. When you're sleeping and you stop breathing, obstruction of that's what sleep apnea is. Anyway, ResMed is holding near highs here, very bullish trading, up 46 cents today to 39.74. And recent breakout here over $25 a share. Let's take a look at a weekly chart for ResMed as well. You got to pay attention to stocks like this that just aren't giving up any ground. I just love the Love the fact it was a breakout actually over 35, not 25. The swing point was right here. It breaks out, and just look at how it's moving sideways here. This is just, in my book, very strong technical action, shows that there's good support out there for the stock. And, a couple more weeks of consolidation. Normally in a sideways pattern like this, you'd like to see at least 4 to 5 weeks of sideways movement. If it's less than that, it's usually not enough time for a stock to consolidate. But ResMed still looking very, very strong here, holding gains nicely. I think it would be lucky if this were to come down to its 10-week moving average at 37.25. That would be probably the most palatable entry point at this point. But then it's a matter of if the market pulls in and a lot of these big leaders come down to their 10-week moving average, do they bounce off this support level with volume? Are there signs that institutions are in there buying again? That is important and something that you want to look for during the next market pullback. How do these leaders react at their 10-week moving average, which, again, is this blue line right here. For ResMed, it's right around that $37 price level. FEI Corporation is a name I was watching. Very, very constructive sideways movement here. Stock outperformed beautifully on Friday. But here you can see this market just starting to be a little fickle here, because this is what I would call abnormal price action. And a consolidation that was looking very solid all of a sudden looks pretty bad, actually. FEI down 4.1% today to 53.92. A lot of volatility in this stock. Doesn't look like there's a whole lot of volume behind the selling today. Still holding above its 50-day moving average at 52.60, but unusual price action today after such a nice move yesterday in strong volume. FEI company supplies scientific instruments for nanoscale imaging, analysis, and prototyping. So even though it's still holding above support, really not watching this name closely anymore, because I think today's price action looks to me to be pretty bearish. Low volume notwithstanding. Vertex Pharmaceuticals, involved in hepatitis C, cystic fibrosis. They've got some other experimental drugs we're working on for epilepsy, rheumatoid arthritis, working on the right side of a base here. This is another one you see the volatility here. I mean, technically it's still holding up fine. It is off its highs today, down 42 cents to 58.62, but holding above its 50-day moving average. But you can see, big gap up here, some volatility here in the summertime, these big declines in price. So you kind of want to understand a stock's trading personality before you buy it. If you look at a weekly chart for Vertex, it is setting up in a decent base here, and the company does show pretty good top line growth in recent quarters, and it's a legitimate company, but you got to let this thing complete the base, okay? Because it is working on the right side of a base here. Still has a ways to go to get to its recent high of $65 a share. It's trading around 58.62 right now. So let's see if the base can complete here. Really not seeing much in the way of institutional buying in Vertex Pharmaceuticals, but this is a good example how a stock consolidates gains. You can see a nice support week here at the bottom of the base. It hit an intraday low, right around $46 a share, and then started working its way higher again. So not buyable, but again, a good example of a base building stock that could have more left, but you gotta let the base complete. Look for signs of institutional buying. It could happen, but that story has not played out yet. Mentioned Friday, let's check in on shares of Kayak, K-Y-A-K, Kayak Software. This is company that came public in July at $26 a share. Yeah, even though the market is turning in a reasonably strong performance today, considering again chip stocks weak, technology stocks weak, Apple, a lot of uncertainty about Apple, about iPhone 5 demand. Kayak, another one setting up nicely here, but we just looked at FEI, a stock that was also setting up, and boom, you get this excessive volatility here. Kayak Software down 5.3% today to 31.91. A day of selling like this calls its technical picture into question as well. So talked about Kayak, KYAK, on Friday as a base that was taking shape, but some sellers in the stock today. A lot of red in my growth screens today, despite a reasonably decent performance for the market. All right, folks, headed into the final break of the day. As we head into the close here, we'll be right back. You're listening to Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Looks like Indices are negative again here. Dow right now down 11 points as we head into the close here to 13,568. Tech stocks have been lagging all day. NASDAQ Composite down 19 points, 0.6% to 3160, and the S&P 500 now down 2.5 points to 1457. Don't forget, if you want to check out my newsletter, Ultimate Growth Stocks, 30 days free. You can do that right on the homepage of TFNN.com. Click on the newsletters tab on the homepage, then investment newsletters. You can pay monthly or yearly, but first try 30 days free so you can understand how I go about the market. I use a combination of fundamental and technical analysis. I often refer to myself as a top-down investor, meaning that I try to focus my buys during market uptrends, and when I start to see signs that the market is ready to come in, I'm not afraid to protect profits, taking some money off the table, nor am I afraid to cut losses short if a trade does not go my way. So capital preservation is very important to me. I realize that I am not going to be right all the time when I buy a stock. The key is that when I'm right, I want to be really right, and when I'm wrong, just admit you're wrong, cut losses short, no big deal. So be sure to check out Ultimate Growth Stocks. Taking a look at some earnings reports after the close today, let's take a look at a stock that has been in rally mode ahead of earnings after the close. Paychex, P-A-Y-X on the NASDAQ. This is a company that provides payroll, human resources, employee benefits outsourcing solutions. Showing a lot of relative price strength in the market, under a little bit of pressure today, but not by much, down 22 cents to 34.33. Not super fast growth here. They're expected to earn 42 cents a share. They made 41 cents in the year-ago quarter. Sales up 4% to $584 million. So that's not the growth that I really look for when I looking for growth stocks for my model portfolio. But Paychex, perfectly sound company here, and a little bit extended in price. You can see another stock that has made quite a move since the summertime, since June, July. Looking a little bit extended up here, but we'll see what the numbers look like. And also after the close, RHT, Red Hat, open source software maker. This one's looking a little bit squirrely, holding above support here at 56.33, but trade has been somewhat volatile in recent days. It is down 8 cents today, trading up near its session high, but still down 8 cents to 57.56. Profit is expected to come in at 29 cents a share, flat from a year ago. Sales up 15% to $322.1 million. Coming up later in the week, DFS, Discover Financial Services. They're going to be coming out with earnings on Thursday. Jefferies today made positive comments about the credit card company. They have a price target of $45 a share. Shares of Discover right now trading at $38.64. The last on Discover up 2 cents ahead of earnings. Another stock showing good relative price strength, holding above support, but extended up here. A lot of extended stocks out there, folks. So this is a market right now where it is difficult to put new money to work, and you want to be careful not to chase here. The market has been running higher for some time now. I think that increases the chances for some sort of pullback here, but a lot of people are looking for a pullback though, so it may not happen. You just want to be very careful when you're buying stocks. You don't want to buy stocks that have run too far too fast. All right, folks, thanks very much for tuning in to Breakout Investing. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon.